These are the best dividend stocks for April 2021. Hey, I'm Luke Downey with MAPsignals. We're all about cool stocks. We're going to be doing a monthly best dividend stocks report. I got it right here. We're going to go through it together. So remember, this isn't personalized advice of any kind. This is all about just how I do it, my process. And a lot of these stocks I am going to be holding for a long time. So let's go ahead and get into it. So I'm going to share my screen. There actually was a gentleman that I saw on YouTube that actually was doing this report on YouTube. So I was like, you know what? Why don't I go ahead and do it myself? So anyway, let's get into it. Home Depot, been around a long time, 1978. They've got about 2,300 stores. Every time I go in there, somebody in orange, they come over, they make me feel really good. They help me. And that's what I like. And that's one reason I bought the stock about 4 years ago. So it's a cyclical stock. Retailer share price is right around $300. It's right at all-time highs. I mean, this thing is just a juicer. And so when I'm looking for a great dividend stock, I want to see a stock that is doing something over time, and that is going up. So here's our chart, and we can tell that the 1 month performance is positive at 15%. The 1 year performance is even better. That was pandemic lows. It's up 55%. And what I also like to do is look at big money signals, right? So it's one thing to look at a chart, but it's another to actually see if there is big money support for the stock. That's what these green bars are here. So we like that. And then when I'm sizing up a dividend juggernaut like Home Depot, is I want to see that they actually raise their dividends. And in fact, they recently did. So they went from 150 a share per quarter to 165 per quarter. So that's a 10% raise. Forward yield sits at 2.22%, and the 1 year earnings growth is right around 8.3%. So that's number one. That's Home Depot. It's a great company, been owning it, continuing to reinvest my dividends. And let's go ahead and get into the number two stock. Number two is none other than Texas Instruments. You know how they always say that everything's bigger in Texas? Well, it kind of is whenever you talk about dividend growth. So Texas Instruments, big time semiconductor manufacturer. They have been around a long time, 1930, got 30,000 full-time employees, right? So we're not playing around with junk, okay? We're playing around with actual companies that actually make cash, and they can potentially raise their dividend year after year. So share price is right around $180. And what do we see here? This is a multi-year chart. It is straight juice, right? It's going up, okay? You got the big money signals right here, a couple of them. That's all you need to know. 1 month performance, we can see that it's positive, plus 3.6%. 1 year performance is up 70%. Now, 1 year ago, that was the pandemic lows. God bless you if you were actually buying stocks. I know I was definitely getting in there. Great company. They continue to just do what we want to see, and that is go up. You want a stock that is trending higher. This is one I also personally own. I've owned it. I think I bought it around the same time that I bought Home Depot in my dividend account. So what did they do recently? They raised their dividend from 90 cents per share per quarter to $1.02. So that's just over a 13% increase. That's checks in the mail, folks. That's what we like to see. The forward yield, similar to Home Depot, positive 2.28%. In the low yield environment, that is not bad, folks. And the 1 year earnings growth rate is plus 7.4%. People ask me, why do we even look at earnings growth? Because typically good companies are paying their dividends out of earnings, and we want earnings growth. We want them to continue to grow, right? You want your earnings to grow, right? That makes you better financially. It's the same thing with companies. So let's go ahead and get into number three. Number three is none other than AbbVie. It's another one that I own. It's a big company, big healthcare name. What do we know? They are global pharmaceutical developer, manufacturer. They're actually recent. I think they were a spin out of Abbott. They've been around since 2012, and they currently have 47,000 full-time employees. So again, we're not messing around with junk. It's a good company. They have a history of raising their dividend. But again, we still need to see, what do the technicals show us? Well, share price is right around $104. They just had a recent pullback. The 1 month performance is actually negative. It's down 3.58%. We can see that in the chart right there. The 1 year performance is just about 50%. So it's doing just fine. And then what do we see? We see some of that stairway to heaven here, these little green big money signals. Now there was a sell signal, but again, I'm not too worried about that because when I look at all of this, all I want to see is more green. Let's go ahead and see what is the data showing us. Well, they raised their dividend from $1.18 per share per quarter to $1.30. That's a 10% raise, right? Who else wants to get a raise? I know I do. The forward yield is 5%. So this is a higher yielding play. There's a little risk with some of their patents and when some of their drugs are going to be available for generics, I believe. Their 1 year earnings growth is still positive 10.5%. So AbbVie is another one that I've owned for years. I like it. On pullbacks, I get excited. And, this is one that I think you should consider. So again, let's go to number 4. Analog devices. So this is another semiconductor, much smaller than Texas Instruments, but what do we know? They do grow their dividend. That's what we're looking for. So they were founded 1965. They've got 15,900 full-time employees. So they're not small. They just happen to be a little smaller than Texas Instruments, but we know what they do in Texas. Everything's bigger, right? Share price is right around 150 bucks. The 1 month performance is a negative 3.8%. We can see that over here. And then the 1 year performance is positive 65%. That's all good, but we need to see what's the big money telling us. And it is, that's the stairway to heaven. There's no other way to say it. Whenever you see a lot of green like this is what attracted me to this stock years ago. I own it. In managed accounts. I think I do personally as well. I forget. But what did they do? They raised their dividend from 62 cents per share per quarter to 69 cents. That's an 11.3% raise. When's the last time you got an 11.3% raise? Well, if you own ADI, you did. Forward yield is not too bad, 1.84%. And then their 1 year earnings growth is an impressive plus 10.6%. So, we're looking for stocks that are doing well technically. They've got some of that big money support, and then they also have good fundamentals. Let's go ahead and get to our next one, and that is Johnson & Johnson. So maybe you've heard of it. They've been around since 1886. Huge healthcare drug manufacturer. I remember a buddy that I worked with when I was I think I was a smoothie maker years ago, and he told me, his mother worked at Johnny John, and he just loved the stock. And honestly, I hope he still held it because 20 years later, they just keep cranking. So they've got 134,000 full-time employees. It's a big, big company, right? We're not messing around with junk. Share price 162. In 1 month, it is up 2.2%. And then the 1 year performance is plus 31%. So definitely has underperformed the market. However, sometimes dividend growth and dividend investing, you're not necessarily trying to outperform the market. You're looking for income and growing income. What else do we see? There's historical big money signals. So there's some green here and there is some green here. That's really what I like to see. And then the last thing is they raised their dividend from 95 cents per share to $1.01. So that's a 6.3% raise. That's not bad. Definitely beats inflation. Forward yield is plus 2.49%. And then the 1 year earnings growth rate for a company of this size, just over 8%. That's just great. So the bottom line is, all of these stocks are ones that you could be thinking about for how you want to dividend invest. Remember that the game is long-term, right? You need to be thinking long-term. If you're trying to build a great dividend portfolio, you need to focus on quality companies. And the best qualities are stocks that continue to go up and also just make lots of money, because if they make lots of money, then what? They're going to be able to pay dividends. So this is your dividend report. Leave us a comment and don't forget to subscribe if you like this type of content. See you guys.